If you are wondering what exactly goodwill is, in this video we will see what it actually is and how it differs to intangible assets, so that goodwill can become clearer to you. What is the difference between intangible assets and goodwill? Many people can think goodwill is an intangible asset, but it is not. Another common misconception, I'm afraid. Both intangible assets and goodwill are assets of a business that lack a physical presence. But goodwill has the added issue that we cannot separate it from the rest of our business. We cannot separately identify an asset goodwill. Indeed, goodwill is a catch-all for all the assets of a business without a physical presence that we expect will generate future economic benefits, but are hopelessly mixed up into and form an integral part of the rest of the assets of a business. Goodwill is an aspect of a business that would be an intangible asset, except it cannot be separately identified. Intangible assets are defined as an identifiable non-monetary asset without physical substance. Goodwill is a non-monetary asset without physical substance, but it is not specifically identifiable and so fails the definition of an intangible asset. However, we do recognise goodwill as an asset when it is acquired as part of the purchase of another business, that is, in a business combination. The reason for this is because when goodwill is purchased as part of a business combination, it can be measured as the result of an arm's length transaction, the purchase of a business. When we purchase another business for more than the fair value of its net assets, we can recognise goodwill as an asset to make up the difference, and in this way support the equity value in our firm's balance sheet. Goodwill is a non-current asset that represents future benefits from unidentifiable assets. Goodwill can be a lot more than simply good customer relations. It can include quality management, favourable locations, good employee relations, manufacturing efficiency, and strong market share. In short, goodwill is where the sum of the parts is more valuable than the identifiable parts separately. This is the sign of a successful business that is creating value. We will have the opportunity to study further the accounting treatments of goodwill in Act 1906(1), Advanced Financial Accounting. Watch this space. For further information on how we account for goodwill, go back to Chapter 5, Section 5.4 in the study guide, and also review the Intangible Assets and Goodwill weekly questions. Also answer, write and rate questions on goodwill in Peerwise.